Again, that doesn't mean that's what the price will be, but my point is for hundreds and hundreds of years, the gold-silver ratio, whether it was set by governments or not, was that low. It was really only after the futures market started that it got a lot higher, and also the demonetization in a lot of people's minds. They didn't even realize people in the Western world have forgotten that it's money. We were just talking about at the breakout. So many countries, people don't even understand how many countries in the world. The Chinese word for money is silver. The French word for money is silver, et cetera, et cetera. So again, silver has a lot more monetary history than gold, and I think that once people start to get fearful, I think it is a no-brainer that the gold-silver ratio is going to go down a lot. And right now it's in the 70s. But that said, I would not say, well, that means sell all your gold and buy silver. I think it's a perfect opportunity, and we talk about this all the time, to do a swap. And I have done them myself, because you can sell silver, take a tax, sell gold, take a tax loss, and buy silver at cheap prices. And it is a no-brainer, but only into the proportion that makes you feel comfortable. And again, I could not agree more that it's a no-brainer.
And if you do that, it's an invisible transaction, by the way, because the loss in privacy in and of itself in buying gold or silver is writing out a check. So you sell 20 grand worth of gold and you get a receipt saying you sold your gold. Your accountant doesn't ask you, what did you do with the proceeds? With the proceeds, we turn around and sell you back 20 grand worth of silver with no paper trail that you now take possession of. That's completely, bless you, completely and totally invisible. So I think that's a cool thing to do as well. Switching from gold to silver. The bottom line is you own enough silver to make you wealthy. I think that, but becoming wealthy with silver will probably come at the expense of everyone around you as the dollar is crumbling. The bottom line also here is that if your focus is gain, it's in silver. But remember, 100 grand in gold I could have on my person, and none of you back in the back would know it. 100 grand in silver would weigh 450 pounds.
Andy, would you say that the gold is more dollar dependent for its price increase in dollar terms than silver is dollar dependent? Silver more so on the supply and demand side.
100%.
Way outdo gold.
100%. In the past, look, as I was saying earlier, I have felt that big money has been manipulating price. So I didn't just come up with this epiphany, right? In 2008, the price of gold went from 1,000 to 700, and the price of silver went from 21 to 9 in 1 week period in July of 08. So silver fell by 65%. Now, you guys don't have to be economists to know that if you just bought two investments, A and B, and A falls by 35% within a week after you buying it, and B falls by 60%, that there's probably not a lot of demand for those products. In fact, you would probably surmise that everyone's dumping it. Now, when it comes to gold, and back in 08, I was able to get it at a hefty premium with a little bit of a delivery delay. But as silver fell by 60%, every major mint in the world was out of silver. Everyone. Every single mint. The US, Canada, South Africa, Austria, Australia, all the refiners, everyone was out of silver. And when they finally came back online, we were able to purchase Silver Eagles and Maple Leafs at a 100% premium with a 12-week delivery delay, and you had to pay up front. So at $9 silver, you'd pay $18, and you'd wait 12 weeks. It's completely detached from the price. Completely. The demand is 100% detached from the price. And when big money suppresses the paper price, they come in and scoop up all the physicals, and that's what led me to believe, because here I am looking at a market that just fell by 65%, and every single product on the planet was gone. And I went the entire second half of 08 with the inability to sell anything for immediate delivery. The best I could do was at best maybe 10-week delivery delay with 100% premium. So yes, the price has become disconnected from the demand. The price is the no-look pass. The price is the misdirection. The price is what they are doing, enabling them to gobble up the physicals while they subsidize the price because people are focusing on price. And so, yes, I think that the price is is, especially in silver, has very little to do with the fundamentals or the demand.
I'm going to highlight a little further. Everyone, a lot of people in this room know about the 2008 shortages, but they don't realize just how acute the shortages have been in silver. We have had almost as bad shortages several times since. Last summer was a great one because, there was a bit of a stock decline when the Chinese devalued, but you know what? Not really a big crisis. We ran out of silver for 2 or 3 months. Premiums surged, and that was not a crisis. People also forget about 2013. Remember, Obama had his big closed-door meeting with the too big to fail bank CEOs on April 11, 2013, and that very day, Goldman Sachs put out a short sell gold recommendation, and then sure enough, the very next day, or actually it was 2 days, Friday and Monday, they hit the price of gold by 8% and the price of silver by 10% for absolutely no reason other than they were scared and wanted to hurt the market. And guess what? May 2013 was our biggest month in business. Maybe 2008 would have been if we could have done any business because there was no silver, but that was easily the best month, certainly since I've been there, because we had a massive shortage. And of course, you know when else we had a shortage? In 2011 when the price went up. That's how scarce silver is, and that's why I'm so sure that at least the physical gold-silver ratio is going down, and certainly in time, eventually the paper one.
Look, last year, July, August, September. Typically, in July, August, September, I go golf because it's like there's nothing to do. No one's buying. It's the slow months. July, August, September, the Royal Canadian Mint and the U.S. Mint experienced successively the 3 biggest months of demand that they've ever had in both of their existences. And they were both out of product for, you couldn't get it. The Canadian Mint would not accept orders from us for a good portion of July. And when they finally started allowing us to do it in August, it was, 4-week back order, 3-week back order. This was last year when silver was doing nothing in the middle of the summer. So the price is really not indicative of the demand. The demand can switch like that, where all of a sudden it's just gone. And I think that this is at a time when most of the people, look, you guys are all the pimple on the elephant, right? The elephant's out there. The pimple on the elephant's in here listening to this nonsense, right? People out there would say, well, you buy gold and silver, really? Right? So what happens when the elephant comes into the room and says, I need gold and silver now, the big money, right? What happens when the big money says, screw my stock portfolio, I need $5 million in silver? I mean, overnight, they will all be gone. If you listen, and I'm not just saying this to try to get you to buy from me. If you Google my name and look at every speech, interview, or podcast I have given at the Sprott convention, at the Casey show, at Stansberry, at any of them, standing up in front of 1,000 people who pay $1,000 to get there, a lot smarter than I am, and I say the exact same thing every time. I'm the little boy who cried wolf. This market will define itself by an inability of all of you to get product. That's what will happen. The prices will go high, and the people on the outside will say, well, shit, the price is so high, I'm not going to buy it. The rest of you who are trying to buy it will find it's gone because the supply is that thin. It has been disrupted so many times when it shouldn't be, when the price is falling and no one wants it, and all of a sudden you can't get it. Well, what the heck? That's not how businesses run. When you have so much demand, people are knocking down your doors, you hire 12 new people, and you build a new facility. You don't go back order 12 weeks and say, we're not going to take your business. This market will identify itself by an inability to source product. I would bet my life on it. If anything puts me out of business, it'll be my inability to get product. And when all of you buy product, what do you do with it? If I call you up and say, hey, those gold coins you bought last year are up $150, you want to sell? You're going to say, no, but thanks. Because it only validates the fear that you had to motivate you to buy it to begin with. It validates your concern. It's the only market in the world where as the price goes up, the fear that you were motivated by is validated. So you're not selling going back into dollars, nor is anybody else. And so the supply from the secondary market is gone. And so when the 5 major mints, US, Australia, Austria, South Africa, and Canada run out of product, forget about China and forget about Great Britain, their mints amount to nothing. When those 5 mints run out of business, it's game over, period. That's it.
I'm going to add 2 things to that. Back in 2008, when we ran out of supply, the demand for silver just for the U.S. Mint was a third of what it is today. And we're still having shortages. They can't add enough capacity. That's how much demand there is. And, last year we had this big shortage, which caused us to actually no one to be able to buy anything for a month or two. Guess what? Demand is now higher this year by a lot than it was last year. And that's with rationing. The Constitution says they can't, but they have been rationing. Look at the Mint website. They're at 1 million ounces a week. Why? Because they can't get enough. And it's way above last year. And we're heading into a crisis right now. So again, silver is definitely going to go into shortage again. And Tad, one more thing. We're talking about when do the elephants come in the room. I have been talking for the past year about when, in fact, it was David Morgan, a good friend of ours, who actually kind of put it back into my head, something that I'd forgotten about for a few years. Institutional demand was gone. That's why you had record demand in the world for gold and silver, but the prices weren't going. Yes, the retail business was high at the Mint, and central banks do what they do with their swaps behind the scene. The Chinese are grabbing, buying product. But the institutions, which were the ones who were buying everything, they're buying mining stocks, they're buying ETFs, everything back in 2011, they've been gone, and they are back. Google my article back from February. It says institutional gold and silver demand, the final piece of the puzzle. That's what I'm talking about. There's a reason why you have record demand to ETFs now. There's a reason why after 4 years, actually for small mining stocks, after I think it's 7 or 8 years, they're all going up now. There's a reason why PSLV, the Sprott Silver Fund, was actually able to do a deal, and why their gold fund is going to be able to do one soon. And even the Central Fund of Canada, which just a year ago was trading at a 12 or 15% discount, is down to a 3% discount. The elephants are coming back into the room. And you talk about a perfect storm of supply, demand, and of course, inventories, and the explosive money printing, negative interest rates, et cetera. And you realize, I cannot believe that we will be able to get through another 12 months without a really debilitating silver shortage.
Next question is for Mr. Hoppin.
Sorry, you're next.
Hey, Andy.
Yeah.
Yeah, I had a couple of questions. One is I'm concerned about the banking, obviously, with what the situation is. And I had relatives and people that I loved that got hurt in 2008, kind of in a big way. And I guess my question is that, like, I'm a finance guy over at my church. And a lot of the endowment money that we have is in CDs and things of that nature. Do you feel that people that have CDs in banks are going to get hurt? That's my first question. And would you put that money into precious metals? I'm sure that's probably what you would think. My second question is, Jim Richards was talking about that, a lot of people in the industry talking about gold's going to go to $10,000 an ounce or whatever it ends up going to, whatever. But what concerns me is when they talk about that, when they talk about silver, they always say things like, well, silver will probably go to $100. Gold goes to 10,000, silver goes to 100,000. When I read stuff from John Williams, he says that potentially right now it should be at $660 an ounce for an ounce of silver. What is real?
Okay, a lot of questions here. First of all, you talk about endowment funds. That's what I'm talking about. Institutions. The University of Michigan just announced their endowment fund is going to buy gold mines. They're looking for something. They're looking for something that will earn them that's not a negative yield or a low yield. There's a reason why insurance rates are going up, aside from Obamacare, not just the health insurance. It's because insurance companies can't get yield anymore because the governments have taken the rates down so low. Institutions are looking for investments that are different from the things that have hurt them in the past or that issue no yield. And they are going to come into gold because, hey, if I'm not going to get any yield, I might as well get something that I'm not going to lose my shirt on, like a bond. So that's number one. You asked about, are the banks in trouble? You're damn right they're in trouble. I don't keep money in banks. I've said it many times before. We were just talking about it. The cash that I keep, and I have most of my cash in the form of physical precious metals, stored somewhere where I don't tell it. A lot of it's at Brinks. But aside from that, I keep it at Charles Schwab and a little bit at Fidelity in non-marginable, if you remember what happened to MF Global back a few years ago, brokerage accounts. Because again, it comes down to the priceless precious metals, worthless dollars. You're talking about a really ugly scenario. If Charles Schwab, which is debt-free with $7 billion of cash, would have their assets frozen, it would mean the world is falling apart. Charles Schwab's not going bankrupt. There is no way, I'm saying it to the world in this podcast, there is no way Charles Schwab will ever go bankrupt. But the government could do all kinds of crazy things. They could say, we're nationalizing every financial institution and we're bailing in Charles Schwab even though it doesn't need the money. So I'm not saying it's risk-free, but I'm saying the banking system, I don't keep anything. Actually, I keep $1,000 in key banks. It's by my house because I need basic services, and if I need a checkbook or if I need a money order to buy because if you buy a gun, you need to have a money order to get the permit, that kind of stuff. That's it. Keep your money out of the banks if you can. You asked several questions. I don't even remember what the third one was.
The other one was about Rickards.
Yeah, well, Jim Rickards.
Saying about
Yeah.
the value of what is it?
Oh, yeah. It's all speculation what the price is going to be. First of all, if gold is $10,000 an ounce, I assure you silver will be more than 1,000. In fact, if gold's $10,000 an ounce, again, it's the what-if scenario. You're talking about there's only one way gold goes to $10,000 an ounce, which is, of course, where it should be right now, and that's because the powers that be have lost control. If they lose control and gold goes to 10,000, it's going to go to 20,000, it's going to go 200,000, and silver will go along with it. That's the whole point. That's the fear. When it goes up, everyone piles in. That's why they're doing what they're doing now. They're record short position in the COMEX, even though the price is way down, where they're so scared of the fear factor coming in, the shortages Andy's is talking about, because they will happen. But I wouldn't get too worried about what people predict. They don't know.
You know, I think it's hard to pick a number, but just know this. Look at the big picture. Throughout all of history, there's nearly a 90% correlation in movement between the two. As one goes, so does the other. It's not always at the same time. Sometimes there's a little lag. But gold won't go to the moon without silver following it to a large degree. And anyone who just picks a number like 10,000 or like 100, you're making an educated guess. In the case of Jim Rickards, a very educated guess. I would never poo-poo anything a guy that is as connected as he is, who's been invited by the CIA into scenarios of war games that are related to financial war. He's tied in, and if he says it, you know, hey, maybe it's true. But bottom line is, instead of picking numbers, just know that as they go together throughout all of history, they're not going to go independent of one another.
Yeah, the issue is not what happens to gold and silver. Again, as Daniel started the show, it's what happens to the dollar. That's why it's so silly to talk about a price. And anytime I hear those two numbers, $5,000 and $10,000, I mean, you talk about a shot in the dark. There's absolutely no reason to pick those numbers other than they are exciting numbers. And in this particular person's case, he is selling a lot of products. It gets people very excited. There's all kinds of people that use those numbers, but there's absolutely no reason to believe 5,000, 10,000, 100,000, any of those numbers matter at all. And again, if you get to $10,000 gold, we're talking about a very vastly different and more scary world. It will never, ever happen in a normal, organized way where markets are functioning and everything is fine.
The reason he chose those lofty numbers was he was talking about gold backing a U.S. dollar, a new U.S. dollar backed by gold. And in order to be able to give them the wiggle room they would need to maneuver, they would need it to be at some crazy number like 10,000 an ounce, or they don't have any ability to maneuver.
I think he used like M1, 40% backing for the U.S. at 10,000. And then if you took China, the Eurozone in the U.S., it was like 50,000.
Yeah, but what's the M1? I mean, we don't even know what these numbers are. They stopped printing M3 the month that Bernanke took office because he said it's too expensive to administer it, at $1.5 million. Again, all these numbers, they're just numbers. They're based on absolutely nothing. I mean, I can give you a number. I did the same math that Jim Sinclair uses. He said, well, back in 1980, this was how much gold was in Fort Knox. This is how much dollars were thing. And I came up to a number of $900 an ounce. And sure enough, it was $900 an ounce. If I do that same number today, and I've written about this many times, it's $15,000 to $20,000 an ounce. The only problem is there's no gold left in Fort Knox. And the amount of dollars outstanding is far more than they tell you. So again, there's no math that can tell you where gold and silver are going. The big question is, how far down will the dollar and the other currencies go?
Next question is for Mr. Schechtman.
I don't know if I understand this or not, but I'm sure you can help me. So the bullion banks go naked short on the COMEX and say gold futures. They have no position limits. They can write as many contracts as they want. And it's risk-free to them because they're backed by the Fed, who can print an unlimited amount of money. How does that game ever end?
Because they, at the same time that they're naked shorting in the paper contracts like JP Morgan, they're accumulating the physicals in their house account. So they short the paper price, they fill up their house account with all the physicals, or I mean, let's say, for example, it's not JP Morgan, even though we know it is. Let's say it's the Chinese. And they short every commodity on the planet. I just read last year in Wall Street Journal that China accumulates 4 to 5 times the copper they need for annual production. If you look at the price of copper, it's been killed. It's been cut in half and half again. So let's short all of the things that we want to get, because by shorting it, we create a story. And the story is that the commodities suck and you shouldn't be buying them, right? Because the prices are violating moving averages and resistance levels, and technical look horrible. So why buy a commodity that's falling and all the technicals look bad? Because you were able to paper short that with a huge amount of leverage. The leverage on the COMEX is 33 times what you can do in your own portfolio. If you call your broker and say, I want to open a margin account, you can do double the value. You got 100 grand in your account. SEC law says you can now buy 100 grand on margin. And the minute you get under 50%, you get a margin call. But if I want to buy a 100-ounce gold contract or sell short a 100-ounce gold contract, $3,500, I control 135,000. So what if I'm worth a lot of money and I start shorting? And by the way, I'm one of these commercial banks, and I happen to sell the options to all the people like you and you and you and you who are betting. And I know where those option levels are. I know where those pivot points are, and I just push it just below that, and all of a sudden you got to cover, and then you got to cover, and you got to cover, and you got to cover, and then just pow. And now the price is falling, and everyone says gold's going to hell, don't buy gold. And now you come in quietly and scoop up the physicals and put them in your house account, and now you have 600 million ounces of physical silver in your house account that you paid pennies for without anyone vying for that same silver. And now you use more paper that you created out of nowhere to cover your shorts, or you sell treasuries to cover your shorts. What it does is it gives you the ability as the big money to create a perception of reality that allows you to steal all of the commodities that the world would deem necessary to be successful going forward, to build your war chest. Because if you just go in and buy it, what's going to happen? The dollar's going to tank, interest rates will spike, metals will go to the moon. All of the things that you want, now everyone knows it. Because we live in a world where information travels at the speed of sound, the speed of sight, the speed of light, whatever. So now you short all these commodities, you create your own perception of reality, you gobble up everything you want at pennies on the dollar, you sell more paper to cover your shorts, and when it's all said and done, you're out of treasuries, you're out of dollars, and you own all of the world's assets at pennies on the dollar with no competition. So that's the only thing that I can think of that makes sense for why they do it. They're trying to accumulate the real thing, and they're trying to blur the value with paper.
But to add to it, you asked, why can't it go on forever? It's not just about what they are doing, it's what they're causing. I mean, what was the whole last 15 minutes about? Shortages. When the price of silver went from 21 to 9 during the fall of 2008, it wasn't because, well, it certainly wasn't because people were selling physical silver. Ask Andy. I guarantee you not a single. In fact, no one ever sells any silver, let alone during a time of crisis. It was because they didn't want it to be a safe haven. So they were buying treasuries, the PPT, the ESF, the Fed, to make it look like that's where you should go. They were naked shorting silver and gold, which was killing mining shares. It was killing ETFs. It was creating a story about how bad gold was. The problem was there was no gold. And in the case of silver, actually, the price never went down at all. If you own silver, it didn't go down 1 penny during that crisis unless you own paper silver. So what happens is every time they do this, the inventories get sucked out. That's why I'm talking about record low inventories, because they've had to supply all those buyers, such in 2008, that wanted silver at these ridiculously low levels. Every time they hit the price, we get higher demand. That's what happened, again, 2013, record month right after that happened. We're having shortages like last year. Just why? Because the price is too low. And we're going to have another one now. Look at what's going on now. You have a record high naked short position in both gold and silver. But it's not like gold is $2,000 an ounce. Gold's $1,200. Silver is $17 an ounce, and they're doing this. So what do you think is going to happen? There's going to be more demand. I texted Andy yesterday when all that was going on. Busy? Yes, very. Why? Because people see the price go down and they want to buy the physical. That's why it can't go on forever. And that's why I've been writing the last week or two about how screwed the commercials are, because they put themselves in this position where the whole world sees that they are record short for absolutely no reason other than, obviously, to keep the price down. And they are going to get blown out of the water at some point, like they were in 2011. And this time around, they won't be able to say, yeah, we killed bin Laden, so the price should be lower. That card has been played, and the whole world is onto it.
You know, the people that pull the strings are not nice people, and they're not honest like you would be to your friends or to someone you meet on the street. You're not going to lie to them right to their face. But in a game that has really the highest of stakes, I think their attitude is, I don't give a crap. We're going to take care of number one first and foremost. We're going to position ourselves, even if it means lying to our shareholders, even if it means lying to the public. We're going to tell everyone commodities are bad, and as we're doing that, we're going to gobble up everything we possibly can and fill up our war chest. And then we'll slowly start saying, no, we're going to dip our toe into the water. See, we told you about it. We did tell you about it, slowly, because JP Morgan, I don't know if any of you noticed, just came out and said gold is now entering a bull market and it's going to go to 1,400 this year. Well, they said it. It wasn't picked up by USA Today. Wasn't picked up by your local newspaper. But it was picked up by a few other websites that we read, and they publicly said it's in the bull market. You wouldn't know it by their short position. But the bottom line is that you can't look at the price and you can't look at what's happening unless you take a broader look at the supply and the demand. And the demand is off the charts and the supply is hard to come by. And this is all happening at a period of time when no one in this country has any idea about gold and silver, but a very small percentage like you. When it becomes obvious that it's time to own gold and silver, it's way too late. You know, this is what I mean by saying when we're in a sea of uncharted waters, there's not a financial advisor on the planet who can tell you what to do, because none of us know. This is a different place than we've ever been. That's why we're all blessed with good intuition, all of us. And very few of us listen to our inner voice. And that's why, as I said earlier, we all go through life, whether it be about relationships or choices we've made. Damn it, I should have done that. I knew it. I saw it. It was clear. I should have been with her. I should have taken that job. I should have done this. Well, shoulda, coulda, woulda. Trust yourself. I have made decisions my entire life trusting myself and my intuition. I sold my house, as I was telling this gentleman here, in 2007 after I had just built it. It was the biggest fight I ever got into ever with my wife. I literally was this close to being divorced. I said, we are moving. She's 8.5 months pregnant. I said, we are moving. I called my buddy. I said, put a sign in my house now, a yard now, because they were building houses down the street for half the price or a fraction of the price that I just built my house for a year earlier in the same school district. I said, we're leaving. I got ridiculed at parties. I got ridiculed by my friends because I put all my $240,000 of equity into silver at $8 an ounce, all of it. And we rented. I said, my wife, Jana, we're going to rent for 1 year. Trust me. Okay? I see this clearly, right? Well, 1 year turned into 6. I screwed that up, right? She was a little unhappy with me moving in the middle of January in Minnesota at almost 9 months pregnant. I was not her favorite person, I promise you. Luckily, someone bought our house. A couple from Colorado who didn't know the neighborhood came in and said, you need to be out in 1 week. I said, God bless you. Thank you. And we went and we rented for 6 years. And I turned $240,000 into $1.25 million by selling my silver that I bought at $8 at $32.50 an ounce. And I bought my dream house. And I followed my gut. In 2009, before I even knew Andy, we both did the exact same thing without knowing each other. I woke up and I heard Congress debating taking IRAs. I said, are you kidding me? This made it to the House floor. These creeps are talking about taking the money I've worked my whole career for. And they want to take my money and make me put it into an IRA backed by treasuries. I said, are you out of your mind? I sold my IRA that day. I paid $250,000 in taxes and $70,000 in penalty because I was under 59 and a half. $700,000 IRA. Do you think that was a popular decision? Do you think that a financial advisor would have given me that advice? No. And I am very adamant about taking accountability. If you're right, like I was in selling the house and investing, I was wrong on the time, who cares? Everything I've ever said, my firm, in 27 years, we've never been close to the timing. We're always way early. Who cares though? I'd rather be 2 years early than 2 seconds late. But everything I've ever done, I've taken accountability for it. And when you're right, it's way sweeter. When you're wrong, you got no one to be pissed at but yourself. Because it's a whole lot worse being pissed at that guy who told you to do something when it's a lot easier to tell you to do something when it ain't your money. When it's his money, I can tell him to do that. I'm going home to be with my family. I don't care when I leave the office. The bottom line is simply this. Trust your gut. It's the best financial advisor you will ever have. And don't be afraid to step out on a limb if it feels right. Because we're in a place and a time that a lot of which doesn't make sense. And I think that unconventional times call for unconventional decisions.
Unless anyone thinks that these powers that be know what they're doing. You know, the no-look pass. You know, this is not LeBron James out there, okay? These are Keystone cops. The way they derive their power is from the printing press. That's it. The fact that they have the ability to print this money and to manipulate markets gives them power. It doesn't mean that they're any smarter or more competent. They just have this weapon that they can use, and they can use it covertly. That's the beauty of it. Like a perfect example is, you know, I wrote my 42-minute audio blog that I just put out yesterday. It was called "The Pathetically Desperate Fed Minutes Attack Will Miserably Fail." And the reason I did it was because it was so obvious what they're doing. They came out suddenly in the middle of the week. I mean, there's no chance they're going to raise rates, and why would they? They'd be crazy. I can go over the litany of reasons why there's a 0% chance in the money markets. They're not going to raise rates. But to me, they said, we got to get gold and silver down. We got the record short position that's going to blow up in our face. And B, people aren't listening to us anymore, and we got to make them listen. So let's just kind of pretend that we are considering raising rates. And the thing is, if you listen to what all these guys said, none of them said that. There's not. If you go over that audio blog, I list everything they said and wrote. As usual, there's not a single thing they said about raising interest rates. They said, if things go the right way, we will consider doing it, which is what they always say. I mean, that's what their job is, right? If things go and make it so that you raise rates, you raise rates. Of course, they never do, so they never do. And the only time they ever raised rates was because they pinned themselves in a corner saying that they were going to do it for 3 years. And when they finally did it, they almost blew up the world. That was last December. So here we are this week, out of the blue on Wednesday, with gold and silver getting ready to break out. All of a sudden, you hear CNBC saying, oh, the Fed is talking about they may raise rates. And so the Fed, the minutes come out. And again, I've talked ad nauseum about the minutes. The minutes happened a month ago. They're doctored to start with. They have no impact on what is happening today. And anything that they did say a month ago went into that policy statement, as well as the 10,000 speeches and press conferences that those guys have given in the last 3 or 4 weeks. And by the way, I listed all the things that have happened since the April 27th meeting, and they've all been bad, not things that you raise rates for. So they do this thing, the Fed comes out and puts their minutes out, it says absolutely nothing, listen to my audio blog, and they hit gold and silver. And by the way, gold is $18 lower than when it was, big deal. So silver's 50 cents lower, no big deal really. They still got their record short position, but they've now put themselves on the hook, all saying that, yeah, we're thinking about raising rates, which in the words of their propaganda says, yeah, they're going to raise rates. Well, what happens when they don't raise rates in June? There's still, by the way, in the markets, an 80-something% chance that they don't raise rates. No one believes them. But they put themselves in this position where they've made it seem like that maybe they'll raise rates. So what do you think is going to happen to gold and silver when they don't raise rates? I mean, yeah, they'll think of some reason. Oh, it's the Brexit. It's, we didn't know the Chinese market was going to fall further or that something gone. But the point is they won't raise rates. And they're going to be still stuck with this record short position and people calling their bluffs. The point is These guys are Keystone Cops. It's like the movie Fargo. They just keep digging deeper and deeper and deeper. The first guy, oh, I need some money, I'll arrange a ransom, and by the end of the movie, they're all dead. That's the position that these guys are in right now. They're going to blow it some way, shape, or form because all the factors are going against them. Maybe it's in June.
Maybe that's why J.P. Morgan is amassing the largest physical position of silver ever seen in the world.
And saying we are in a, quote, new and long-lasting gold market.
As they've shorted the price for the last 3 years to enable them to get said position without everyone crowding them out in their endeavor. So it's a classic misdirection. And the mistake that people make is believing that the world is transparent. Well, the world of high finance is anything but transparent. It's screw thy neighbor is the world of high finance, and that's what they're doing. They're misdirecting with price to enable them to acquire everything they need to move forward. And that's why they do it. That's exactly why they do it. And they have the ability, not only the immunity from the government and the government regulators, but also the ability to paper over all of those short positions that give them this huge stockpile to move forward in whatever direction the world takes.
The next question is for Mr. Hoffman, and then, of course, as everybody this evening has the chance when they go home to listen to his 42-minute audio blog at milesfranklin.com.
Hey, guys. So a couple weeks ago, Porter Stansberry sent out something to his advisors or his subscribers that I thought you would think might be interesting. I want to get your thoughts on it. So he said that he had dinner with some guy who's high up in the banking industry, you know what I'm talking about?
Yep.
And used to be in government. And he told him that we were looking at the banks doing some credit default swap with gold and U.S. treasuries. And I guess you know the story.
Yep. What you're talking about, well, I believe what he said as he came away from that, and then he used the number of 10,000 an ounce. We were talking about this earlier at the break. He's talking about, did you read that article, by the way? Okay, so I did. He read the article he was talking about. He went to dinner with some people in the know, which he couldn't say who they were. Very, very influential people who basically said that gold was going to go to the moon because they were, what I took away from it was that he was implying that gold was going to back some sort of a new world reserve currency that the U.S. government implements, and in order to make it palatable, they would have to raise gold to a level of $10,000. Let me say this about Porter. I'm at all of his conferences for a reason, because he's as tied in as anyone I've ever met. He's the best marketer I've ever met in my life. So sometimes when I hear what he says, I think, well, that's just Porter marketing. But on the other hand, when I read that, he really went out of his way to make it seem like, hey, this is real deal. And he didn't. Most of what Porter says, which really pisses me off, is that you have to listen to some long spiel and then pay for the answer, right? I can't stand that. That time he didn't do that. He came out and said, hey, this is what that was said at the dinner. They said gold's going to 10,000 an ounce because it's going to be part of a new world reserve currency or implemented by the United States. Of all the things that I've ever read from Porter, that impacted me more than most, because it's one of the few things he ever came out and told you the whole story without having to pay to hear the end. And if any of you are on his mailing list, you know what I'm talking about. Every single time he sends something out, it's you listen to a long thing and then pay $149 to get the reports that give you the answer. Well, this time he didn't. And I think a man with his reputation, like him, where really when you're in his business, reputation is everything. You're not going to come out and say stuff like that that's sensational for no reason. So I mean, I don't know what to make of it other than to say I got a lot of people asking me about it, and I think he believes it, and I kind of do too, in the respect that ultimately as I was saying to some other people at the break, the only way that you will ever be able to get a new currency that is accepted by the masses is to back it by something that can't be screwed with. Because we've shown that over time, politicians will find a way to manipulate the currency to their own benefit. And if you want to issue a new world reserve currency that is accepted and embraced, it'll have to have something after the gross mismanagement. Do you know when the Federal Reserve came into play in 1913, their job was to be the steward of the value of the dollar. It's lost 98% of its value or thereabouts since 1913. So, the bottom line is that we've proven a poor steward of the world reserve currency. So if you're ever going to have a new currency that's accepted, it'll have to be backed. And he gave some math as to why it would be 10,000, and I'm not exactly remembering how he got to that number, but it basically, that was the number that all these people are using, and it has to do with the amount of gold at Fort Knox, our national debt, and the ability to have it as a world reserve currency. So, I give it more credibility than I do if it was from somebody else, because, again, with Porter, just like Daniel, and just like us, I mean, if we're up here saying a bunch of crap, no one's going to listen to us or pay for our newsletter if you're Porter, or listen to what Daniel's saying, or listen to what we're saying. So I think he believes it, and he's a pretty credible dude. He's made a fortune, and he's a very shrewd businessman. So I don't think that he would say it if he didn't believe it.
That said, I have several comments myself on this. One being, again, anytime you hear that number 10,000, you got to think about it. It's a very, very powerful marketing tool, and it's often used out of context. The other thing is, anytime you're talking about insiders or people who are unnamed, why would I believe that there are insiders or people unnamed who are going to be telling people like Porter Stansberry things? Third of all, the U.S. government doesn't have any gold left. Why would they want a reserve currency? It makes no sense at all. We have sold. It's mathematically proven that the only way we could have gotten this far was by selling, leasing, or swapping all the gold in Fort Knox. That's why it hasn't been audited in 70 years. There is no one on the planet that will lose out more than by any kind of significance to reemergence of gold in the United States. Our power is derived from the fact that people still own the dollar, countries still own the dollar, and they still transact in it. If they stop doing that, we're just a country of 300 million people with 19 trillion of debt, 200 trillion of unfunded liabilities, and no manufacturing base, and the highest standard of living, way above where it should be. So,
When you put it that way, that sounds pretty sucky.
Yeah. So again, and Rickards is another. He's always saying, "Oh, I know these people." Who does he know? He's out of the way that I see it is he was once in the system, and he said all these kind of things. Now he's out of the system, so he talks like a normal person. And again, the biggest myth, when you were about to ask your question, I was going to say the biggest myth that's out there, especially when you talk about the powers that be, is that they're all together in on this. You couldn't, I mean, look at the actions of the countries in the world, the trade wars, the currency wars. I mean, we're talking about if Trump's president, the Mexicans won't let him in the country, the UK won't let him in the country. Marine Le Pen, who's going to be the president of France next year, says Hillary Clinton's going to start World War III. There's no, and let alone the Chinese, I'll bet you there's only a handful of American diplomats who even speak Chinese, let alone to try to negotiate with them. When they have all the cards, by the way, they have the gold and they have our debts that we owe them. So again, there's no conspiracy out there that there's going to be collusion. There definitely no one in power wants a gold standard. And we don't own gold, me meaning we in this room, because we think there's going to be a gold standard. We own it because it's been depressed to keep this fiat standard, which is destroying the world, going. One day there may be a gold standard, but again, we're saying, Andy was saying, the only way there'd be a currency that's accepted is if it was by something that's not going to be screwed with. They could screw with gold. The U.S. says they have 8,133 tons of gold when they probably have none. They could say whatever they want. They can manipulate. There's going to be a long, long way between today and between any kind of world in the future where people trust in the currency.
This is what I mean. You get my opinion, you get his opinion. In the end, neither of us know squat. It's your gut. What does your gut tell you? If you didn't give credibility to what Porter was saying to begin with, you wouldn't even listen to it. The point is that you believe in your gut that the dollar's in trouble and gold go to the moon. That's what you take away from it. Regardless of what he says or what I say or what Porter's source says, truth of the matter is we're in big trouble. And the likelihood of gold going way up, it's possible. More possible than it is of not going way up. So in that environment, You do all you can. You buy it, you accumulate it, you look at these low prices as a subsidy and a gift to accumulate it. And if the worst thing that happens is gold never takes off, well, you give this gold to your children or your grandchildren someday. And I can promise you this, in the year 3000, when your great-great-great-grandchildren still have those coins that were passed on through your family, and the dollar bills that we call money are hanging in a frame in the Smithsonian as what once used to be, I promise you that gold will still be worth something, as it has since the beginning of recorded time.
And don't forget for a second, back to the secular American argument, that I mean, how many times do I write this and say this? On average, the average currency around the world used by 6+ billion people, gold price in those currencies is either at, near, or way above all-time highs. If I had to do the math of all the 180 currencies, I'd say probably on average 10% below the all-time high, including in both Mexico and Canada and Australia. And heck, even in Europe, the euro, it's only about 23% from its all-time high. India, 13%, Japan, 8%. And then, of course, all the BRICS that are way above their all-time high. So again, say, well, when's gold going to go up? For almost the entire world, it's gone up huge. And the problem is that in those countries, you can't buy gold. You don't have the supply chain like you do right here. There's no Miles Franklins around in most of the world. And a lot of places they do. They have huge VAT taxes and all kinds of things that make it almost impossible to get. Here, the place you need it the most and the currency has the most to lose, it's been subsidized to the point where, you asked about fundamentals. Well, the miners have been going out of business because it's way below the cost of production. And their reserves have been going down and their production is going to be going down. The price is too low for any circumstance.
You understand what he's saying? What he's saying in layman's terms, because he thinks at a level that most of us don't think at. What he's basically saying is that the dollar is irrationally strong right now, and it's at record levels in every other currency across the globe. What happens when the dollar starts to lose value? It'll be at all-time records in every other currency across the globe until it surpasses it in dollars. If you would have done nothing other, a year and a half ago, not last summer, but the summer before, so almost 2 years ago, it was $1 buying $1 in Canada. When I get off the plane in Montreal to do our audit, $1 would buy $1. So if you did nothing other than in a civilized place like Canada, put $1 million in Canadian dollars into gold and done nothing else, 2 years ago, it would be worth $1.4 million today. And the price of gold has hardly done anything since then. It's up a tiny bit. It's because the dollar is so stupidly strong right now that gold doesn't look like it's doing anything. And the dollar has been manipulated up. Every other currency across the globe is at all-time record high prices, and gold are 10% below.
Gentlemen, our next question is about gold and IRAs, as well as an emergency plan for the Brink storage.
Hi, can you please give some information on Gold IRA and does Miles Franklin handle this kind of account?
Okay, so, I stood up here a few minutes ago and told you how I sold my IRA. I was 39 years old at the time I did that in 2009, and I did that because I looked at where I was in life, and I thought to myself, well, gee, I have to be 59 and a half before I can legally take money out with any penalty. The likelihood of shenanigans happening in the IRA system after I just heard about them, the Congress debating taking IRAs and making you mandatory invest in a treasury program, I figured that or the taxes going way higher, I'm out. Okay, but if I'm closer to the distribution age or already in the distribution age, it's a whole different ball of wax. The IRA program with gold is really cool if you are nearing the retirement age. 59 and a half is the age where you are allowed to take money out of your IRA without paying a penalty, right? One of the big fallacies we all live under is that the money in our IRA belongs to us. Right off the top, you can cut 25 to 30% off of the value of your IRA. That goes to uncle. So when you got $1 million, you really don't have $1 million, right? So I figured, well, I got 20 years before I can take money out. There's no way it's all going to be there. I'm out. But if I'm 58, 59, 60, 65, the IRA offers intriguing advantages. And what that is that with the precious metals IRA, you can literally buy the physical metal. The only thing is that in most cases, we don't need to get into how you can avoid this because it's convoluted, but in most cases, it's held by a custodian. And the custodian that I happen to work with intimately in North Dakota is one of the approved custodians by the government. And so you buy, let's say you have an IRA and it's worth X amount of dollars, and you buy gold and silver and you have it held by a custodian. Here's where it gets cool. With every other IRA, let's say you're investing in energy stocks or in IBM or Apple or whatever, when it comes time for distribution, at 70 and a half, you must take distribution. The IRS says you have to take a distribution start taking distributions at 70 and a half or you get penalized a huge penalty. So let's just say you have it filled with Dow stocks, just a bunch of stocks, and you start taking distributions. Well, how do you do that? You sell a portion of your stocks, you get money into your account, and they send you a check. You took a distribution, right? It's kind of like a pie. You got a giant pie, an apple pie, and you're 70 years old now, and they say, well, you need to start cutting that pie and taking pieces. You could take the whole thing, or you could take little slices each year. So with the precious metals IRA, you fill it up with gold and silver, and now when it comes time to distribution, whether it be a voluntary distribution at any time, even if you're under 59 and a half, you can take a distribution. You'll pay a penalty along with your taxes, or a mandatory distribution when you're 70 and a half. You can actually pull the metals out and take an in-kind distribution. It's one of the only investments I know of in an IRA where you can actually take the metal or the investment that you invested in, take it back. There are very few investments that allow you to do that. So you fill it up with 1 ounce gold coins and 1 ounce silver coins or fractionals, whatever you want. And then as you start taking distributions, you pull the metal out as an in-kind distribution. And it really allows you to make a very large splash in the gold pool without writing out a big check, is my way of thinking about it. So bottom line is that the IRAs are cool for some people. If you're at the right time in the continuum, then yeah, fill it up with gold and silver, take possession of it through distribution channels. You could say, I don't want the gold and silver. Maybe things change. I need the money. So then we'd buy it back, send the money to the custodian like Entrust or New Direction or any of these IRA custodians that allow gold ownership, and then they'd send you a check.
She has a follow-up question as well.
What's your follow-up question?
Yes, please. Like you said about the custodian, if the custodian keeps your money offshore somewhere, say in Canada, now what if some political chaos or some, say, EMP happens? Yeah. So how do you access your precious metal?
Well, that's why I like Canada. So as I mentioned, our business was founded on Swiss investments. I am a charter member of Global Gold, which means it's a Swiss company. I can sell you gold in Zurich. I can sell you gold in Hong Kong. I can sell you gold in Singapore. All three of those I don't want if the you-know-what hits the fan, because it's 3, 4, 5, 6,000 miles away. Canada is a different story. Our program with Brinks, we would deliver by per-later courier to any physical address, private or industrial, commercial or private, in anywhere in Canada within 24 hours. You could get your stuff. So, the bottom line is that, yeah, what if things get really, really bad? Are you going to be prohibited from getting your stuff? Well, I can assure you this. I live in Minnesota. I could be in Canada in 6 hours if I have to. I can get in my car and go north, and I'll be in Canada. You can't say the same thing about Hong Kong, Singapore, Zurich, or anywhere else unless you have a submarine. And so I think that the bottom line is that there are no perfect choices when it comes to storage. But at least in Canada, if you sense things are going to get really bad, you have a fighting chance of getting it than in Europe where things are rapidly going cuckoo, or in Asia with the South China Sea conflict, and who knows what the future may bring. And while Singapore and Hong Kong and Zurich are popular venues, and I can do it, I have the ability to do it myself. I don't have 1 ounce in any of those 3 places. All of my gold is held in either Vancouver, Montreal, or North Dakota, and a very small bit at my house. Now, if I were you, I'd hold as much at your house as you possibly can. And if I was thinking about going offshore, I'd go to Montreal or Vancouver long before I would go across the Atlantic, because at least you have a chance of getting it if things ever got that bad.
Our next question I thought would have been brought up much earlier on. It's about the Shanghai Exchange.
Hi, guys. Thank you all again so much for coming. This has been wonderful, except now I have a lot more questions than I did. My first question, Jim Sinclair has just mentioned on the bottom right-hand corner of the national debt clock, something's been added, and that's gold. And the gold ratio is 7,300 per ounce. What does that mean?
They really added gold to the national debt clock? That's very interesting.
He just mentioned this yesterday.
I don't know. Well, again, the people who administer that national debt clock website is not the government. That's private
Sure.
people. But they should know better because that gold isn't there. They're probably referring to the, that mythical gold that's supposed to be at Fort Knox in West
Close
Point,
to
which is not.
10,000 an ounce.
Yes, so I would ignore it.
Okay. Now, my big question, this is my big question. I assumed with the Shanghai Exchange last month, we were finally going to have gold start becoming more what it should be. And then I started thinking about the fact that China is really tied to the central banks. We don't like to think about that, but they are. And then I started thinking about the Exchange Stabilization Fund in the basement of the Treasury and their printing press. And is that all correlated?
Well, again, when you say the Shanghai Exchange, you actually mean the Shanghai price fix. The Shanghai Exchange has been around. And what that simply means is, we were talking earlier about the appropriately named London fix. Well, now there's one in Shanghai too. And the reason being simply more, to me, public relations than anything. The Chinese is saying, look, we're the biggest producers in the world. We're the biggest consumers in the world. And as much as we like the cheap prices that the COMEX affords us, we don't like the fact that the Western world is setting the price. So we would like to have a part in that. That said, when you think about it logically, who cares if a bunch of Chinese people get together? I fail to understand why a bunch of Chinese people getting together at, say, 2 in the morning as opposed to the British people doing it at 10 makes any difference on the price. But what they're saying, they're making a statement that we want the pricing mechanism to move over here. And by the way, right after that happened, that coincided with a big jump in the gold price. So again, it's just one, as I say, it's one piece of the mosaic.
The fact that they were moving towards physical possession and not labor.
Well, the Chinese are clearly the biggest holder of gold in the world. Mathematically, it must be the case. And they are now admitting to buying it. Of course, when they announced in July that they had 1,700 tons compared to 1,000 tons from 2009, they were lying about that too. And the reason they were doing so was because they wanted to get in the SDR basket, which was another PR move. They wanted to be accepted and say, look, we have gold, we're real. So they got accepted into the basket, and then of course they devalued the currency. I mean, it's all a sham. All this stuff is on the surface. When it comes down to it, again, the Chinese people, they're not some brilliant people sitting in some room. They just have a long, long history of gold and silver. They were the first people to create and destroy fiat currencies. They've probably created and destroyed more fiat currencies in their various dynasties and all the others combined. They know very well, it's ingrained in their culture that gold is money and silver is money, and they are acquiring as much as they can, and they are trying to take a bigger role in the world in the gold and silver markets. That's all it is. Just making a fix doesn't mean that's the end of the cartel.
I'd like to add to that one bit. And here's the thing. What's different, I noticed that the drops aren't as severe because if all of a sudden the COMEX gets the idea of dropping the price again really high, really low, what I think would happen is that the difference between the COMEX market and the Shanghai market is that the COMEX is a futures market. The Shanghai market is cash. You pay and you get. So if all of a sudden the West starts to get keen about manipulating the price super low, what's going to happen? Shanghai people will sell their gold at a high price and do the arbitrage thing, and they'll start buying on the COMEX at a lower price to take delivery. Basically what it is, it's a governor. They cannot really start to screw with the price the way that they used to do on the COMEX market without, I believe, getting some repercussions from big investors in Shanghai, because when you're cash and carry, it's a real reflection. Here's what you pay, here's what you get. The futures market and COMEX, well, I'll short the hell out of the price and we'll call it this price, even though the fundamentals say that's screwed, right? So the people in the Shanghai will say, if these idiots keep dropping the price, let's just go buy it on the COMEX and take delivery, because we know that the real price is not that. So let's beat them at their own game. I believe what the Shanghai fix has done is put some sort of a governor on the manipulation on the Western markets. Because if you all of a sudden drop the price too low, you're going to have arbitrage all over the place. So I think it's a good thing. It may not be totally visible, but to me, what I notice is less volatility. It seems to be a little tighter. And even the drop that we saw, it's only a 1 or a 2% drop. It's not like they've done it in the past. I think in the end, the Shanghai market will be the downfall of the COMEX market, because it's the real price versus a make-believe price.
It's a lot of pieces of the puzzle, as I said, of the mosaic, the Deutsche Bank thing, you name it. There's all these things that are conspiring against the traditional ways of manipulating the market. But there's really only 2 words to describe all of this stuff that's going on. Everything Andy's saying, everything I'm saying, and those 2 words are bull market. We are now in a bull market. What we were in was not a bear market. It was just a very successful 4-year manipulation when they almost lost control in 2011 and were forced, starting with the Sunday night paper silver massacre, and then, of course, the Operation PM Annihilation 1 on September 5th, 2011, the very day that the Swiss pegged their currency to the euro, etc. The point is that bear market phase is over. We are now in a bull market, which is why when Goldman Sachs in 2013 says, yeah, sell short gold, they win. And this year when they said it, they lose. Because no matter what these guys try to do, we are in a bull market now. And stuff like the Shanghai fix, which simply means the Chinese asserting themselves more and making the market more physical than paper, is just a big, big piece of the puzzle.
How to? Let's discover together. Please subscribe.
Our next question has to do with a new currency that's recently hit the market.
Hi, gentlemen. What is your opinion on Bitcoin and the other cryptocurrency that are coming around? And if you favor silver or gold more than Bitcoin, would you actually prefer Bitcoin over Palladium then?
Okay, well, you are asking the right person now. And it's funny because I remember Daniel interviewing me. We were in San Diego. I guess it was the early 2014, just when Bitcoin had just come out and had this massive spike up to $1,000 a coin, and it pissed us gold people off because we were in the middle of our quote bear market and watching the price go, almost as much as an ounce of gold, and didn't understand a thing about it. That was 2014, so it was 2 years ago. But a lot has happened in the past 2 years. And I've done my best to keep up with Bitcoin, not understanding a thing about the technology, but following to see what it is and what it means and what it might mean. And what I've come to the way that I've come to view it is that it seems like the hacking issues are not there anymore. I don't think anyone is worried anymore that they're going to wake up and like Mt. Gox, all of their Bitcoins are going to be gone. And it's obviously become far more stable than it used to be because more and more people are starting to view it as money as opposed to an investment. I would have said, if you asked me 2 years ago, I would have said it's a pure speculative investment. If you ask me now, I say, guess what? I own some. I mean, it's not even a 1% position, but you're right. I definitely own some because I believe that it's taking on monetary values in a world of cashless societies and negative interest rates and capital controls. I think people are looking for any way that they can preserve their value. So I believe that as a storage of value, not because it's going to be a currency, I think it has as much odds of being a currency as gold does as an actual official currency. But I do believe it's becoming a storage of value. I mean, I would not put a huge amount into it because it is speculative and it's new, but I do think it's taking on monetary properties.
He has a follow-up question as well.
Before I ask my follow-up question, could you tell me real quickly, would you prefer Bitcoin or Palladium?
Palladium to me is just an industrial metal. Yes, theoretically it's a precious metal, but I have absolutely no interest in it. Platinum is another story.
Okay.
You can Google my article. I'll toot my own horn. I wrote it almost at the day of the bottom early in January, called Platinum, the Forgotten Metal, because I just, I looked at the math, aside from the fact that, look, it's okay that it's trading at a discount to gold, even though it's usually traded at a premium. I don't think it needs to trade at a premium, but it does have over time about a 90 to 95% positive correlation directionally with gold and silver. So I'm pretty sure that platinum is going to do just fine. As far as palladium, I have absolutely no opinion of it. I think it's just an industrial metal. If the dollar collapses, would I rather have palladium coins? Sure, but I really have no interest in it.
If you ask people, what palladium is, they look at you cross-eyed. Most people have no idea what palladium is. And as Andy mentions, industrial-wise, its main uses are as a catalytic, a substitute for platinum in catalytics. And so there's only one country that makes a coin in palladium, and that's Canada, and they really kind of stopped. You can get 1 ounce bars from Switzerland, sometimes from Russia. Palladium, to me, at very best, should be the tiniest portion of your precious metals portfolio, because when we think about history and preservation of capital, it lies squarely in gold and silver. Platinum has no monetary history to speak of in terms of protectionism. Palladium even less. So to me, it's okay to own a couple of palladium coins, but if I had my choice, 10 times out of 10, I would buy silver or gold over palladium, and I would buy platinum before I'd buy palladium. And, palladium is okay, but tertiary at best.
Andy, I would probably say, and just correct me if I'm wrong, the platinum and palladium could almost be completely separated from gold and silver, just as the mining stocks are separated from gold and silver.
100%. Gold and silver to me are wealth, are money, been money since the beginning of time. Palladium and platinum are industrial metals / investments, and but they're part of the same family. They don't have the history. I don't know how many times in the Bible gold and silver are mentioned. A lot. But you go back through time, platinum, you'll never hear about it. It's a new phenomenon. Palladium, even less than that. And if it weren't for the fact that palladium was used in catalytics, I have no other idea what it is used for in the industrial world. I know it has other capabilities, but if it were more thought of, you would find other countries minting it, other than Canada and the Maple Leaf, and they hardly make them because there's not a lot of demand. There was talk a couple years ago of the United States Mint making a palladium St. Gaudens, and they scrapped the idea. So I think, it's okay. Like Andy said, I'd rather have it than worthless dollars, but in the end, I think palladium is an afterthought until you have a really substantial gold and silver position built behind it.
Yeah, they're also more like a special situation investment right now because of the supply, because of the demand. But there's such a small amount of production that if a new mine was to come online, it could completely devastate the price. So, but again, completely separate from physical metal for protection. What was your next question?
Yeah. My next question is, excuse me, the current rules for taking out gold and silver from storage facilities, it's pretty easy. I have accounts. I could just tell them I want to take out my physical storage, and it should be pretty easy. But in the future, when we're predicting silver and gold to be really high, do you think there'll be extra rules put on by the government for these third-party storage facilities? Hey, now you got to pay an extra 25%, or you got to report it, or anything, or is it going to become harder to take it out?
You know what that sounds like
Not
to me?
talking about confiscation.
Okay. Sounds like a what if question. You're saying, what if things get so crazy in the world that storage facilities start to take from you, or the government wants to take 80% of your taxes, of your precious metal? Again, these are the things that it's good you're thinking about now. But I assure you, none of these things would ever happen unless the worst case scenario already happened. So again, you have to make decisions. If you're going to own gold and silver, how much of it do you want to keep at a storage facility? If you're going to keep it at a storage facility, in what country? What type of facility? How much do you want to keep? I mean, you have to think of all these things. But again, none of these things get done proactively. It's all reactively. So I assure you, if there was ever a movement to tax away your precious metals, it would be because the currencies have already collapsed and precious metals are becoming priceless. So you have to think beforehand and make decisions.
That's why I don't buy mining shares in South Africa, even though there are some companies that intrigue me because of the geopolitical risks at hand. I'd rather own mining shares in Canada and Nevada where I don't have to worry about that. And here again, this is what I was saying about going through life saying, damn it, I knew I should have. I saw that coming. If you're asking yourself questions like that, then you're losing peace of mind and sleep at night. And in the end, that's the only asset that really matters is peace of mind and sleep at night. So you keep it somewhere where it doesn't erode your peace of mind. And if you're starting to think, well, I have it in this facility and it's starting to weigh on you, then pull it out and hide it somewhere else. Because these are all these choices that we're left with. And I think the ultimate decision is one that gives you the greatest sleep at night.
It also goes to anything that is going to benefit you. If the question is the government going to try to screw me eventually? Absolutely. They're always going to try to screw you somehow. The next question is about the Brexit.
Andy Hoffman, your thought on June 23rd, the vote for England, I guess, to exit? And impact on precious metals.
Well, let's see. I wrote an article this weekend after watching Brexit the movie, which you should all watch because it's free online, and I think it was called The Most Important Vote in History, something like that. So yes, I think the Brexit is a very big deal. And what that means is, while the UK still has maintained its own currency, some would say smartly, some would say not, because they've destroyed their currency just as much as the ECB has destroyed the euro. They have been smart. They have not been smart enough to avoid being inside the European Union, which is a big brother type organization, which has literally destroyed Europe. And if you watch Brexit the movie, I mean, people in Europe know this. Smart people in Europe do. Americans don't. Just watching this 1 hour documentary, you'll understand how destructive this is. Now, we've had a bunch of referendums in the last year or two. This is the trend, and there's going to be a lot more of them. I mean, I think there'll be a Texas secession referendum at some point in the future. But right now they're focused on Europe. We had the Greek vote. The people voted against the government. We had the Catalonian vote in Spain. They voted against the government. So that's the last two. The Swiss unfortunately voted with the government, as did Scotland. But I think that this one is going to be, the polls are showing it's a dead heat right now. And if the UK decides to leave the European Union, and they are the second largest economy in that European trade union, I think there will be tremendous ramifications on the currency markets. But more than the currency markets, you have all these nationalist trends around the world. And, I talk about the Texas secession. Everyone will be empowered if the UK leaves the European Union. That includes France, which is about to vote in an extreme nationalist. In Spain, where the moderate, he just got elected. Now they're going to have a new election. In Portugal, they elected a moderate, and then they kicked him right out. And of course, Italy is a simmering pot of nationalism. So I think that right now, if they vote to leave the Union, I think there's going to be a lot of speculation about the breakup of Europe. So yes, I think that will be a big deal. And right now, from what I read, the polls show that it's somewhere around a dead heat. We'll see what happens. And there's going to be a lot of propaganda and market manipulation between now and June 23rd, I assure you.
Next question is about the mining shares.
Yeah, Andy, and also Daniel. I guess we all know that since December or January, the mining stocks have been killing the precious metals as far as growth. What's a good recommendation from your guys, from your own point of view, of weighting of mining stocks versus precious metals in the portfolio? And do you see any serious risks in the future for the mining stocks?
Andy?
Yes. No, I mean,
There you go.
Again, there's so much hype about my views of mining stocks. Look, I owned them for many years, and I worked in the mining industry for 5 years. And in 2011, I decided on a personal basis I did not want to own them anymore. And I was very vocal about it. I didn't say short them or sell them or they're going down. I said they are extremely risky, and I don't want to own them anymore. Okay? The fact that they went down a lot has nothing to do with anything that I thought or believed. Frankly, I didn't think gold and silver, they'd be able to knock them down. So therefore, I probably didn't think the mining shares would go down that much. All I said was that they were risky, which it turns out they have proven to be more amply so. But here we are today. Yes, they got killed and now they've had a big run. So what happens next? I don't know. If gold and silver prices keep going up in an orderly fashion, they will be great. Not everyone. Some of them will have problems. Many of them will do well. But if they don't go up in order, what if we wake up and there's a dirty bomb or something, or some horrible event goes on, or a bank holiday, and governments start to nationalize mines and stuff? I mean, there's all kinds of risks out there. I don't know what will happen. They may be the greatest investment ever, and they may not be. But they have to be separated. As Daniel himself, who's in the business, said right off the bat, they are separated. Gold and silver are money. Mining shares are speculations. I have no opinion other than that they are likely to do very, very well in an orderly gold and silver market. But if you have a disorderly political, economic situation, it makes them more risky. It doesn't mean they will go up or down. It just means that they are risky. After all, they are targeted. That industry, I learned it more than anyone. That industry has been targeted more than any other. So again, high risk, very high potential reward.
So zero waiting?
No, you're waiting,
zero
or either
for
of you
me.
guys?
Zero for me.
Not for me, though.
Yeah,
I
everyone's
mean, I look
different.
at that as a whole different ball of wax than Andy does, and there's no right to wrong answer. But I think a safe play is to use the model that the Swiss have used for 300 years in the way that they invest. Their investment strategy is of a pyramid. The older we get, the wider the base of our pyramid gets. So the theory is let's call it a 60-30-10 or a 70-20-10, whereby the base of our pyramid is 60 to 70% of our assets in things like a paid-off home, cash in the bank, gold and silver coins, real estate that you own, things that are very conservative, low growth, and low risk. The middle portion of your pyramid, the 20% or the 30%, would be things like utility stocks, paying a dividend, treasury bonds, throwing off some income, things that carry slightly more risk but throw off some income. The top 10% of your pyramid is the home run, the mining shares, the .com shares, the swing for the fence type of thing. The theory behind it is that if you lose everything on the top 10, you make nothing on the middle 20 or 30. As long as you're making 2 or 3% on the base of your pyramid, you don't go backwards. And in a perfect world, you hit a home run on the top, you do well on the middle, and the base of your pyramid is meaningless. You can make more money on the top 10% than you can on the whole bottom 90%. The most money I ever made in my life was on one stock. I was 23 years old. I was 3 years in this business. I had a call from a client of mine who was a geologist, and he says, "Andy, how much money you got?" I said, "Not much." I said, "I have $9,000. I put $3,000 into an IRA the last 3 years in a row." He said, and God rest his soul, his name was John Tomchek, and I'll never forget him. He's deceased, and I love him. Because he said to me, "Trust me, put everything you have into this one stock. It's called Western Copper." I said, "I'm 23 years old. I don't know squat. I'll take your word for it." So I put $9,000 into Western Copper. Western Copper, I was buying at under 20 cents a share. So I got an awful lot of shares, right? Western Copper, a few months later, got bought by a company called Western Silver. They changed their name to Western Silver. They got bought by a company called Glamis Gold for $7 a share. Glamis Gold, few years later got bought by Gold Corp for around $30 a share. And I turned $9,000 into $700,000 because of one stock that I bought in mining shares. So when you say these things don't happen, I say they do happen. And I simply say to you that as long as you're smart in the allocation, and lucky, you can get lucky too, but don't risk the base of your pyramid to the mining shares. In the last 3 or 4 months, Daniel has been promoting and writing about many mining shares, few of which I've been fortunate enough to buy. One of or two of which upon Daniel's writing. The first one I was lucky enough to buy AG, and that stock AG, First Majestic Silver, I bought at $3.30. Today it's at almost 12. Was over 12 the other day. That was in January, right? So here we are 3 months later. I put $40,000 into that, and I've paid for my 3 kids' college education if I sell today. So you tell me, is there room for mining shares in a market that's got its ass kicked so badly, so much worse than precious metals? The mining share industry has been beaten down so unfairly and unjustly, it's not even funny. And when you see mining shares selling at fractions of what they were when gold was 400, you tell me, is it a good place to put your money? I would say absolutely. I don't make any money doing it. I told you, call my friends at Global Sprott. They'll take great care of you. But I think you're missing a buying opportunity of a generation if you don't. Now, here's the nice thing about having a couple guys who really believe in what they say, but have a different opinion. I love him like a brother. He's a lot smarter than I am. And he may turn out to be right. I may turn out to be right. Who knows? Everything in investing is taking a shot, a calculated risk. And when I see something that's trading well below what it was 15 years ago when gold was a fraction of what it is, and I see it now with the world I see in front of us, I say, hell yeah, take a shot. But don't steal from the base of your pyramid to do it.
And what it comes down to is the last question. It has to do with how much sleep you can get. That's all. I've not once said what I think mining shares will do other than it makes me comfortable. I had mining shares 100% of my portfolio from 2002 until 2008, and probably 75% from 2008 until 2011. I had the greatest gains and losses of my life during that period. I determined personally, especially after working the business, I did not want to do that. I sleep well at night. Andy sleeps well at night doing different things. So again, do you want to invest in the mining shares? Sure, why not? If it makes you happy. Do you want to put 100% in? If it makes you happy. It's all up to what you feel confident in doing.
I will say one thing, and just to kind of tweak this, right? So I put some money into it, and my broker, who's my friend at Sprott, of all the people I've met in this industry, the brokers at Sprott Global are my best friends in the industry. They're people that I would hang out with if I were not working with them. And my buddy Eric calls me and says, you need to take some profit off the table now. You need to sell. It's gone too fast. It's ahead of itself. So, that's the thing. I never think that with my gold coins, ever. I hope I never need to use them. I'll give them to my kids someday. But I think about this investment I've made continuously. Should I sell? Should I pay for my kids' college right now? Be done. It's going higher. I had dinner with Keith Neumeyer in San Diego a few weeks ago, the president of AG. He says, it's going way higher. What do I do? Oh my God, drives me crazy, right? I don't have that with physical gold. And that's kind of what he's talking about. It's the peace of mind, the difference between the two. One is my investment. I hope to get rich. The other is my wealth that I hope to give to my children and to my grandchildren. There's a vast difference between the two, an ocean of difference between the two. Never confuse or blur the lines between the two. One is wealth. One will make you wealthy if it hits and will drive you crazy along the way. So,
yeah, I would say if anybody's looking for a thrill, you could just buy silver. And silver's a 10-bagger from here, at least, in my opinion. Again, it goes to just price speculation. But with the mining shares, there's so much that goes on in them. If you don't know what you're doing, you really probably should just avoid them. But with the mining shares, it's really people plays. I've seen companies, Andy and I have seen companies that are great companies, and they've gone from $1 when they started producing gold to 10 cents. And it had nothing to do with them. The people were actually really good people, but the market took them down. And, you know, some of these smaller companies, if the head guy, if he had a heart attack, these companies would see a tremendous amount of sellers. And you never know when a hedge fund is looking for liquidity. So you have to be very select. You know, I would not buy the GDXJ. It's got a lot of crap in there with the good stuff. So it's really a stock picker's market, especially for these juniors. But you have to partner with the right people who run them, and then the right people who are the shareholders. And, you know, as far as allocation, look, I'll tell you my own personal feeling on it is you have to, and it goes to what Andy said, you have to be comfortable. And when I was very comfortable with my precious metal holding, I actually about this time last year stopped. I used to buy silver about 10% of my income. I stopped and I started buying First Majestic silver, and I started saving in First Majestic shares, and I've seen the same thing and experienced the same thing Andy has, where it's just gone dramatically higher. But my house is paid off. I have a successful business. I'm very comfortable, you know, with my living standards. And, you know, it's a matter of comfort. I was comfortable to make that decision. And just so it's even handed, probably a year and a half ago when these mining stocks were down 75%, I told my wife, how much worse could it get? They're down 75%. Let's have that all in moment. Let's put $1 million in and watch this thing turn into 100 million. And I did that. And that $1 million went from $1 million, shockingly, and I picked really good companies, went from $1 million to probably 200,000 in the matter of 3 months. Not good. I went, and believe me, my wife for months didn't even ask. It was a don't ask, don't tell policy at the house. Luckily, you know, I've had an opportunity to reinvest and reposition things, and it's been an amazing year for anybody who's bought these stocks essentially since the summer of 2015. And I agree with Andy. I believe we are absolutely at the birth of the new bull market. And for when it comes to the precious metals, you know, it's a saving strategy. It's safety. It's protection. When it comes to speculation and investment, that is, you know, it's really up to your comfort level on the mining stocks. Just know that they're extremely volatile. So if you've enjoyed these 100 and 200% returns, just know that a 25% correction could be coming. And just like these stocks have moved up dramatically really quickly, they can go straight down just as fast. Although I do believe we're in a bull market. If you saw what happened, what was it, 2 days ago on Wednesday, I mean, all these stocks had a massive pullback, 5-10%, just bam, last 2 hours of the trading day. The very next day, they all rallied right back to where they were. So I think the way gold is acting, just like these guys were talking about, and the way the mining shares are acting, it's not the way it's been for the last 4 or 5 years.
And let me just say, we're getting near the end. We're going to take 2 more questions, but then Andy and I and Daniel will be here for some time after. But of course, don't let your questions end here. Our job is to answer questions, all 3 of us, and we'd love to hear from you both on the phone and by email. And we really appreciate you coming. I also, before we get to those final 2 questions, I really, really want to thank Daniel Amadori.
Yeah, thank you, Daniel.
Future Money Trends is one of the better, if not best, websites out there for education. And you can hear how Daniel talks. He's not promotional. He's trying to make money for himself and for you in an honest way. And he also puts out some of the best material in the industry. So again, Future Money Trends, thank you very much, Daniel. And
thank you.
Yeah.
And by the way, I only buy the picks that we profile. I don't buy anything else. The only stocks I own are the ones my subscribers own, and I own them after we profile.
I've watched it. Daniel and I don't talk like Andy and Daniel do. I see him, I say hi, give him a hug. Always happy to see him at the shows, but that's our relationship. They speak and do interviews all the time. I've watched his picks. Every single one of them, but the potash pick, has gone to the moon. And he's a guy who's done what we've done successfully, and that is partner with smart people. And the smart people will get you to where you need to be. And if you would have done nothing other than follow his advice since the beginning of the year, you're up a couple 100% across the board on every single pick he's made. Kudos to you.
Thank you, sir.
Yeah, I just have a question about, I believe in everything you said tonight about a big foundation of gold. I've been doing that since 2000. But I'm worried about the political events and the safety of me driving or mailing metals to wherever to get turned to whatever the de jure currency of the time is. So I'm thinking about, I need to have a way to do transactions, pay bills online, electronically. And there's gold money, but I'm not sure about that with that thing you had about stuff outside the country and with the government coming down on me.
You're just asking a what if question. And
Yeah.
you're saying you're worried about political events. Well, you should be happy that you've been buying gold since the year 2000. I'm damn worried about those political events too. And honestly, the last thing I'm worried about is how I'm going to purchase things. I'd be more worried if you're going to be able to purchase things, if you have the kind of things happen that you were worried about.
We can help you. We can help
Yeah.
you. I mean, you could store the metal at the Dakota Depository. The nice thing about the Dakota Depository, it's not my company, although I've worked with them for 27 years. They're family to me. They have their own company. And so there's this line here that I can't step over. So if I call him up, let's just say your name's Joe Smith, and I say, hey guys, Joe Smith just called me. I'm in a hurry. He wants me to ask how much gold is in his account. Well, they'd say, sorry, Andy, even though you do $300 million of business out of here, and even though we've known you for 27 years, sorry, we need to hear from Mr. Smith. So my point to you is this. You could store your gold at the Dakota Depository, and you could call me up on a Monday and say, I need you to sell, after you alert the Dakota Depository, of course, and say, please sell 4 ounces of gold. You could say, I need a wire for $5,000 in the next 30 minutes. Done. There's no shipping. It's in my logistics center. It's segregated to your account, fully segregated, fully insured, no shipping. And whenever you say sell, it's sold. You say send it to me, it's sent to you that day. No time lag. If you own a stock account, and you sell a stock, the securities law is T+3. T stands for trade day. So if you sell a stock on Monday, which is T, Tuesday, Wednesday, Thursday, on Friday morning, that money's in your account. With me, you call me up and say, I need it in 30 minutes. It's an emergency. It's in your account in 30 minutes. I'll wire it that moment. I have no delay. Or we'll send you an overnight check if you'd rather. So as an option, you store it with us, not with me, but with the Dakota Depository, who I work hand in hand with, and you'll have money whenever you need it, no shipping involved. There's always a solution.
Right there, though, that is the difference between Miles Franklin and everybody else. If you've ever bought or purchased gold and silver from a bullion dealer, there is zero personal service. Zero. Right now, you have access to the owner of Miles Franklin, and what he's just told this gentleman, what he can help him do, or when it comes to the price of the metal. A lot of people like to try to penny pinch it, but look, just like he said, the guys who are cheaper, they're out of business. People lost the money. Miles Franklin is the safe way to go. It's the way Rick Rule goes in Sprott Asset Management, and that's quite a testament again, because here they have their own bullion company, Sprott Metals. So milesfranklin.com, you can go there. There's going to be a new website pretty soon, by the way, too, where you can buy the metals online. But right now, you call it in, you get personalized service, and that representative is even assigned to you then, right?
It is, and on my business card, so when I go and do like the Sprott show, and I have my cards out on the booth that 1,000 people walk by, and I had Rick Rule come up to me and said, are you kidding me? You put your cell phone on your business card? Are you kidding me? Do you ever get any sleep? I am the only president of a company that does the amount of business we do that I know of in this industry that puts his cell phone number on his business card and gives it to the public. I am accessible. What makes us different, when I can stand up here and say we're different, I'm a fraud if I'm not different. And what makes me different is my accessibility. Any of my clients will tell you they call me 7 days a week on my cell phone. Sunday nights doesn't matter. If I'm not there, I call them back. If they text me, I get right back to them. And I joke with my wife. I've taken a lot of trips around the world. I have yet to take a vacation in the last decade. Whether I'm on the beach of Jamaica, the Bahnhofstrasse in Zurich, or the rainforest in Panama, she takes pictures of me on my phone. She has a giant collage in her office of me on my phone all around the world. But if I'm not there for you, or you, or you, or you, or you, when you need me, what good am I? How different am I? I'm not. I'm a fraud. What makes me different, what makes our company different is someone like Andy who bleeds. If you read Andy, you know he bleeds this stuff. He is more emotional than anyone I know when it comes to this stuff and feels it. Me, I don't need to take your phone call, but I do. I take all of your phone calls, all of them, to the point where I'm joked and laughed at by my contemporaries in my industry, and Rick Rule says I'm crazy. But that's what makes us different. That's how we built our business from scratch, from a loan from a friend and cashed out insurance policies. That's how we've done $6 billion in sales and never pissed anyone off enough to file a negative remark. That's how I've got to where I am, is by being accessible and trying to be different, trying to be honest, trying to have integrity. To me, the one thing in the world that frightens me more than anything is a negative remark from one of you. And that ends what I'm able to do and stand up in front of a crowd of people at the Sprott show in July and say, I've done $6 billion in sales and never had a complaint. That means the world to me. And that's the difference between us and anyone else. It's the only thing I can say that makes us different.
All right, last question of the night. But again, like Andy Hoffman said, we'll be around all night. Well, as long as you guys want to chat. Hopefully that bar at the Hilton or Marriott, wherever we are, is still open.
Yes.
I'll try to make it quick. So, Andy, for you, Huffman, I think this conversation has been centered around a topic of an inflationary environment. Harry Dent strongly believes, yeah, you're smiling already. This is the last question. This is the last question. So, Harry Dent strongly believes that demographics play a very strong role, an important role in a deflationary environment. How do you respond to that, and what facts do you point to support your argument that that's not going to be the case?
I have not said that's not going to be the case.
All right.
In fact, I have been asked to respond to everything that Harry Dent has said by countless people because, look, first of all, if you look at his track record of the recommendations, you probably won't get as excited about what he says. But that said, what I have said about him is he is a brilliant economist. He is absolutely right about demographics. I've been saying the same things. I wrote Demographic Hell about Japan 4 or 5 years ago. I wrote Demographics and the Death of the Dollar a few years ago. Completely agree with him. The problem is with him, among other things, and many others, this insistence on the black and white deflation versus inflation. Most people don't even know what those two words mean. I mean, theoretically, inflation means the rate of increase in the money supply. There will never be a deflation of fiat currency system. There never has been, there never will be. And as far as when people say, well, it's going to go down because of deflation, there's no such thing as a deflationary crash. There's always something going up. I love how people say in like 2008, it was deflation, everything fell apart. Treasury bonds soared. People say, well, but the yields deflated. Yeah, but if you invested in treasury bonds during 2008, you made out like a bandit. And guess what else you made out like a bandit in? Physical gold. Even if they knocked the paper price down, physical gold was up in 2008. Physical silver never went down in price. Okay? And again, there's always going to be things going up and down. Do you think that the price of health insurance, just to pick something, is going to go down? Because of the demographics that he's so deflationary about, with all the baby boomers getting old at the same time. And there's no money in the country, so the only way to pay for it is with money printing. Do you really think that health insurance, which is like one of the biggest costs in your life, are going to go down? Of course not. What about the cost of insurance in general? As I said, they're going to be taking rates negative. How are insurers going to do anything but raise their prices? Right? There's plenty of things that are going to go up in price. And the one thing, by the way, that has gone up consistently throughout history during deflationary periods has been Gold, how about that? What do you think was the best performing asset in 2008? Gold. What was the best performing asset in the 1930s? Gold. Remember, it was revalued. They doubled the price while everything else was falling apart.
Do you know why that is? The reason gold does well in a depression or deflation is, as Doug Casey says so eloquently, it is one of the only assets in the world that is not simultaneously someone else's liability. In a depression or deflation, your biggest concern is the counterparty's ability to make good on their obligation. Well, this company issued me bonds, but they're going out of business. The U.S. government has bonds they're issuing you are dollars, but the currency's deflating and the bonds are going down. When it's a depression, you're worried about the ability of the person to be able to make good. Gold is not someone else's liability. So there's a man named Roy Jastrom who wrote a report, I believe, called The Golden Sextant, I think. He was a professor, I want to say, at Georgia University. It's a long time ago I read this, but basically his conclusion was that gold performs best in a deflation, more so than in inflation. Inflation makes you money, but in a deflation, when everything else is deflating and losing value, gold is not someone else's liability simultaneously at the same time, so therefore it retains its value. It has no counterparty liability.
You know what I was just writing about yesterday to finish this? I was writing about what happened during the last three market corrections, let's call them. When the Fed raised rates in December, before that the last two. When the Fed raised rates in December, which caused the crash in January and February, and then last year when the Chinese devalued the yuan, which I predict 24 hours in advance. Well, in August, right after that happened, the Dow fell in a week. I think it was 2,000 points. The CRB index fell 8%. Crude oil fell from $44 to $37 per barrel. Treasury yields fell by 35 basis points. And gold went up $100 an ounce. And then what happened this year? The Fed raises rates. Remember, that's supposed to be bad for gold, raising rates from 0 to 0.25%. Well, it was the worst start of the year in the history of the stock market. And guess what it also was? The best start of the year in the history of precious metals. So again, here's two things that you need to avoid. Anyone who uses the numbers 5,000 and 10,000 as regard to their prediction of where gold is going to go, and anyone who uses the word deflation as to a reason why markets are going to do something.
Andy, I wanted to also say to everybody, where is this deflation? We read about it all the time, but you know what? Talk to a millennial. Their college tuition cost is soaring,
rent,
healthcare soaring, rent soaring, home prices. Seriously, where is the deflation?
Deflation is in your Apple phone and your big screen TV. Your flat screen TV. The first TV I bought in 2004 was $5,000 for a 42-inch TV. Plasma. Now you can buy it at Costco for $200.
Yeah, look, I wrote an article.
Yeah. We need.
No, I wrote an article 4 years ago called Need versus Want. And then I wrote another one, Need versus Want Part 2. That's what the problem is with deflation. It causes governments to print money, i.e. inflation, which means, as Andy said, the price of your Apple iPhone goes down. Not that anyone needs a new Apple iPhone, but the cost of food and insurance and rent and healthcare and anything else you need to live will only go up in price. You do not have crashing currencies and hyperinflation and negative interest rates without prices going up of things you need to live on.
Well, thank you very much for joining us, everybody. Really appreciate you taking the night.